Hello and welcome to this special broadcast coming to you from the World Economic Forum's 44th annual meeting here in Davos. Now, if the question you're asking is whether India is back on the agenda, well, my response to that would be not yet. The few business leaders that I've interacted with here since Tuesday have yet not sounded very positive on India. They're hopeful, but not positive as yet. We have an interesting situation with the Indian delegation that's visiting here. It's fairly top-heavy when it comes to the government delegation. So I think we have 5 or 6 cabinet ministers attending this year's WEF annual meeting, which is surprising for a government that's just about to go to elections. On the business front, the numbers are large, but several familiar faces in Davos are missing. We don't have Aam Aadmi Mahindra with us. We don't have YC Deveshwar. Mukesh Ambani dropped out. Sajjan Jindal dropped out. But we do have one Davos veteran here with me today, Uday Kotak, who's been coming for many years and is amongst the handful of senior business leaders that is attending this year's annual meeting. Mr. Kotak, welcome to CNBC TV 18 and thank you for your time.
Great to be here again.
What do you make of the mood that you're picking up in Davos? Is it a mood that expects a global recovery this year, or is it more subdued?
Menaka, this year you don't have any major global issue.
Right.
Nothing which is shattering. There is no European crisis, there is no global financial crisis, there is no Iraq, there is no Afghanistan. It almost seems like a Davos without any major global issue at this point of time. If at all one gets a sense that global economy is in a sense of repair and improvement. Europe, people still believe will be slow, but looks like nobody is expecting a crisis.
Okay.
The US as well, no crisis expected, maybe growth a little slower than what people would have liked, but no major issues on the global agenda as it looks today. But having been at Davos for many years, I've found that when Davos looks very calm, you have to be careful because there's always some storm coming some point of time.
When you say storm, is it a good storm or a bad storm? A bad storm that could take us further lower, or a good storm that might churn things but help us move upward?
I think only time will tell. So when we meet here in 2015, we should reflect on a calm, looks like no major issues Davos. And of course the interesting aspect about this year's Davos is you're getting the Iranian premier.
Yes.
And the world's watching how that shapes out and what it does to global oil.
That's going to be a very well-watched session, especially because it comes just before that interim agreement kicks in on the 20th of Jan. We were talking to the chief economist at the IEA earlier today, and he said that this could unlikely have any impact in the near term on crude oil prices. So at least for the stretch of 2014, he's ruled out any peace agreement with Iran or any easing of nuclear sanctions having a big impact on the oil market because he thinks this will take a long time. What's your view on this?
I'm more optimistic. My view is Brent, which is relevant for India, will be an average of sub 105 for 2014 calendar and maybe closer to 100, and that could be good news for India.
What's the basis of that assessment,
I think I think one is expectation on Iran, therefore no major political conflict out of...
so the geopolitical premium will go off.
That's correct. At the same time, you're seeing a steady increase in the prospect of shale from the US. You're not seeing at this stage any major war or civil strife situation. The only place one has to keep a watch on is Saudi Arabia and Syria, but nothing which seems to really affect the global oil situation at this stage, and a relatively slower growth in both China and India. So if you look at the situation globally, I feel oil is more likely to be in a $100 to $105 mark, which even if it's 5 or 10% lower than last year, it's significant from an Indian point of view.
All right, so let's talk India. Is India back on the agenda here in Davos?
I don't think India is seriously on the radar the way we have seen India in the years of 2006 and 7 and even in 2009 when there was a global financial crisis. But I don't think that's a bad thing, because why do we want to be in the limelight when we don't at this stage deserve to be? I mean, let's get our act together, let's see our growth go up, let's get our significant improvement in moving to a 6 to 7% GDP. Yes, we've made some correction through the last year in current account, fiscal is looking better, but there's a lot of work to be done and we are work in progress.
Is the fisc really looking better, Mr. Kotak? You're a numbers man. You look at the numbers very carefully.
It's looking better for this year.
Well, they're doing a lot of things. For instance, pushing out some of the subsidy payments. Even on the disinvestment front, all of it has been heaped into this last quarter of the fiscal. The extraction, if I may use that word, of special dividends from PSUs. Is the fisc really looking better on a sustainable basis? The quality of fiscal improvement.
I think the good news also is that there's a diesel price hike happening every month. So, and if oil is under control, with a hike every month, you're really bridging the gap from both sides.
So that one big subsidy is being taken care of.
Exactly, and that's a very large part of the fiscal situation.
So you're happy with the quality of the improvement in the fisc over the last quarter?
I think there's a lot which can be done. We've got to be careful about things like how food security and everything else will affect next year's budget. But if we get a mature approach to fiscal planning next year, I don't think we need to be excessively worried about the fisc.
Okay, let me also talk to you about interest rates. We saw the RBI hold on the last time round, saying let us look at some more inflation data. Since then, we've seen some minor reductions in inflation, especially on the back of lower food prices. What is your assessment of where we are in the inflation cycle, and therefore how the RBI is likely to respond to it as close as the next policy meeting, which is the month end?
I think the jury is out. The market is of the belief that we have a pause coming in 20th of January. And I would put a 80% probability to a pause on the 20th of January and only a 20% probability of a 25 basis points increase. And therefore, if you go with a base assumption of a pause, the question then is what happens in the context of the new draft which has been put out by the RBI today on monetary policy. If you really look at the CPI trajectory, our economist is saying that by next year, CPI should be somewhere around 7.5%, but he doesn't expect the RBI to have significant room to bring down from 7.75% to repo rate.
So they've linked, so at least in the report, they seem to, and if I understood this correctly, because I've just looked at a few news reports, they've linked the key rates to the inflation rate 4% plus 2 or minus 2.
What they've said is 8% by next year, 6% the year after that, and thereafter 4 plus minus 2. So next year, as long as we get to below 8, we would have made progress in terms of this report.
Is that realistic targeting?
In my view, we have a pretty good chance of getting to below 8.
So you think that this
the question is that if we get to below 8, does it mean that our repo rate, which is 7.75, remains there for a long time, or no? Therefore, the speed at which markets may have been anticipating reduction in rates may have to be tempered based on this report.
Do you think, and the report aside, what the RBI has done recently with holding on to rates and, like you said, an 80% probability of them pausing again in January is the right approach?
No, in my mind, you also have a very slow growth. I think growth is going to surprise us in terms of it being slower than what most people...
On the downside.
That's correct. And in that situation where there is significant capacity available, you don't really need to push the interest rate button too hard.
Okay. So when you say slower growth, why are you saying it's going to be slower than anticipated?
My view is I will be delighted if we touch 5%.
Are you talking about fiscal
14?
Yeah. Okay, right.
But I don't think we'll get there.
But fiscal 15, many people are anticipating that we'll exceed 5%.
But fiscal 15, you've got a lot of imponderables, including the politics. Therefore, too early to comment on fiscal 15. And at this stage, if I was looking at the situation as it stands today, if we are somewhere better than 5 for fiscal 15, it's not a bad outcome as things stand today.
Okay, I want to talk about the imponderables such as politics, but before that, I also want to talk about the health of our banking system, and NPAs has been the big bugbear, especially for PSU banks, not as much as for private banks such as yours. You all just put out numbers a day and a half ago, and they were not bad at all. You don't have a growing problem with asset quality, but you are seeing some slowdown in your loan book. Can you talk a little bit about that, since this is the first we're getting to speak to you?
My sense on the first, with reference to the banking sector and then a bit on us, I think banking industry still has a significant problem on stock. And there are few sectors which are not seeing signs of recovery, which is things like infrastructure, airlines, diamonds. Those are the sectors which are continuing to be in serious trouble. And As an extension of that, derivatives of those sectors like construction equipment and even commercial vehicles, particularly for mining and infrastructure. So these are sectors which so far we are not seeing any signs of significant turnaround. On the other hand, if you look at the consumer side, the consumer is still paying his car loans. He may not be buying a car in a hurry, but he's honoring his commitments. We are seeing good traction in things like tractors, agricultural financing, even small and medium businesses and small businesses are continuing to grow, and a weaker rupee has helped some of those. So there is a good India from a credit point of view, and there is a challenging India. And on the good India, I continue to be positive, which is actually why you're going to see growth trending upwards from 5 into next year.
Okay.
And the challenging India is continuing to pull down in our growth much more than what we are bargaining.
So the consolidation of balance sheets on that end of the corporate front will continue at least into the next 2 or 3 years. All the restructuring, the
that is
CBR
the issue, and
processes.
banks will have to figure a way out of handling that. Therefore, on the banking sector as a whole, I think there are significant challenges in 2014. As far as Kotak is concerned, as we said in our call yesterday, we think most of our challenges are behind us. We've taken the pain in terms of recognition of NPAs, in terms of recognition of MTMs, and we are looking at 2014 as a bank far more positively compared to what we saw in the second half of 2013.
And the growth in your loan book will then come from the good India?
We think good India can give us a loan growth for the whole balance sheet at around 15% going forward.
This is FY15?
I would say calendar 14, FY15.
All right, that's great. Now let's get to the imponderables, because this is the sexy part of the conversation. Who are you going to vote for? Narendra Modi-led BJP, Rahul Gandhi-led UPA, or Arvind Kejriwal-led Aam Aadmi Party, or Third Front?
Menaka, last time I read something on politics, it said 1 week is a long time in politics. You're asking me to take a call which is like generationally away, which is 6 or 8 or 10 weeks away. So let's wait for it, and you can ask me 1 week before the election.
But what's going to change between now and then? Their policy positions are fairly well known. You know what the UPA has or has not done in the last 10 years. You know what Rahul Gandhi stands for. You know what Narendra Modi stands for, what the NDA did in its first term.
So who are you voting for?
I've been voting for the longest time now. I have no problem declaring this for the Lok Satta party, because ideologically, and they're a very small party, ideologically though I find myself I won't say closer, but they're the least I dislike from the gamut of political options.
My voting will depend on the candidate from my constituency, and I will vote on the basis of the candidate rather than the
South
party.
Mumbai candidate always has been Milind Devra.
So in the past I've supported him.
And he's a UPA candidate.
Milind's a friend, and I like Milind a lot, and I have supported Milind in the past.
Okay, I'm not specifically trying to get you to reveal your secret ballot. What I'm trying to say is, who does corporate India want to come to power after the next elections? Is it the NDA? Is it the UPA? And do you definitely not want a motley third front led by an AAP kind of situation?
My view is all of corporate India is figuring out whether an NDA or an UPA, who can make a stable government. And if it is the NDA, it will be NDA. If it is the UPA, it is the UPA. Corporate India is far more concerned about a stable government than anything else.
Well, we got a stable government the last 2 times. And corporate India has been fairly unhappy with what has transpired in the last 5 years in terms of policy action. So I ask you this question again.
No, but I think you also got to keep in mind that the UPA is positioning a new leader who was not positioned last time. And this leader, Rahul Gandhi, has also been a pretty open critic of his own government. So we got to watch what their manifesto is, we got to watch what the BJP manifesto is, and take a call after that.
Do you think that if we do get a stable government, let me put this question to you hypothetically, if we get a Narendra Modi-led NDA, winning at the center, that could help put India at the between 5.5% to 6% growth trajectory for FY15?
My view is we have to be clear. If we get a stable government, there will be some level of euphoria to start with. But we have to go beyond that, from euphoria to execution, and I would watch that. And a lot depends on what's the structure of a coalition and what's the flexibility available to a government, within the government and in the parliament. Therefore, my advice strongly to corporate India is don't jump to any conclusion too soon.
What do you make of the AAP or Aam Aadmi Party brand of economics that we've seen play out in Delhi, and then we've seen Maharashtra pick up from there and say, look, we're cutting power rates as well. What do you make of this?
I would like to divide it into two parts. First, does India have a problem of corruption? Has it deeply eroded a sense of consciousness in this country? The answer is yes. If somebody has come out wanting to break that, whoever it is, I think India needs to do something. Okay? So, on the pure movement where, and if you go back to history, Congress party was a movement in the early 20th century. And it is that movement which was the movement of independence. So in a way, what is happening is a form of a movement.
Okay.
And whenever a movement happens, it gets people very uncomfortable. I mean, when Mahatma Gandhi talked about Satyagraha, people said, hey, this is a crazy idea. You will fight the British guns with Satyagraha. So there is a power in a movement. And having said that, we have got to watch how the movement gets into governance. And there are questions on that in terms of the execution from an agitation or a movement to governance. And the party may be learning. It's early days. It will make mistakes. But at this stage, you know, the AAP story is a week-to-week story. 2 weeks ago, people were talking about AAP getting 40 to 50 seats. This week, people are talking about AAP getting 10 to 20 seats in Lok Sabha. So as I said, 1 week is a long time in politics. Wait till you get closer.
Are you